Look out, world. Okay. Look out, bro. I'm live, man. So I'm gonna get back with you, brother. Peace out. Look out, world. Being will come back live in the garden. Um, like I said last night, I was going to go over, how to buy stocks and what are stock options because, like I said, right now, with everything that's going on, I hope you're paying yourself first because, like I said, this is going to be a great opportunity. I mean, I can't stress enough how you can actually put yourself in a great position to, obtain some financial security from other than just being an employee. You've seen what happens when you're just an employee. I mean, the government can just come in and just shut everything down. And if you don't have a portfolio, if you don't have any, you know, any financial backing to hedge on, it can be a tough situation. So I wanted to come with this video because I wanted to kind of give you some information on how to actually buy a stock. I know, right? That's wild. KY, what it do? So, fan, I want to first start, like I say, if you haven't, hit the like button. If you haven't subscribed, make sure you subscribe. I think it's some good information that you can get up in here. Like I said, just food for thought. Like I say, I've always talked about paying yourself first because I think it's important to have a security blanket because, like I say, you can never know what's going to happen. And with this particular situation, with so many people not working, I mean, it can be some stressful outcomes when you don't have that extra income to, fall back on. So let's get into it. First of all, family, if you want to buy stocks, and get into the investment game, you need to know how to actually buy the stock. Okay, what does that entail? Well, first of all, I would say in order to even start to do this, you have to know where to buy your stocks. All right. Buying the stock is basically finding an institution or researching an institution that provides that service, i.e., Fidelity, E-Trade, Charles Schwab, Ally. I mean, there are a lot of different financial institutions out there that you can buy stocks from. Okay, look out, Brandon. Mm. Brandon says, I bought some stocks in the last 2 weeks at Lowe's and companies I believe in, but well, they're up before it crashes. Should I sell and take a gain? No, if you're in it for the long run, Brandon, it all depends on what your objective is. I mean, if you swing trading, okay, you want to go ahead and take your gains, but at the same time, you know, if it's a company that you like, it's a company that you've done. Oh my God, yeah, no, you don't sell those, man. Yeah, I will hold on to that. And actually, when it drops, you know what I'm saying, increase your position if it's something that you are pretty comfortable with and you've done the research on. Darren, look out. What's up, D-Mac? I see you. All right. So, like I say, guys, let's get into it. How do you buy a stock? All right. First of all, family, like I said before, you want to try to research an institution to actually open up an account. I did this. No problem, Brandon. I did this. I did a video a while back about choosing opening up brokerage accounts. Right. So the first thing you want to do, you want to open up a brokerage account. Okay. And I'm a advocate of active investing. I'm not into referring you to someone else to run your money. I mean, if you look at the people that have 401ks right now, ask them how they're doing right now. Okay. Why would you let someone else take over your money, take care of your money? You need to do that yourself. Been doing good, Darren. Been doing good. Make sure you go to Schoology, man. I'm going to be dropping some information on Schoology. And actually, I got a folder for you, Cash, right now for, I think it was 7 period. So go check that out, all right? And like I said, once you open up that brokerage account, there's 3 types of accounts you can put in there. A brokerage account where you can buy the stocks, which is an individual account, a retirement account, and a cash management account. All right. Now, before you actually buy the particular stocks you want, research the companies you want to buy in. Don't just buy stocks just to buy. Research a company, and companies that you need to research. How do you research companies? You can go to Yahoo Finance. You can go to Bloomberg. You can go to Zacks. There are a lot of different platforms out there. You can actually go to SEC, the SEC website as well. To look up this company's information, or go directly to that company's website. Okay, because they have all their financial information on their website. And if it's something that's not on their website, you can always get that information, okay, from SEC website. Okay, or you can go to, like I said, you got Bloomberg, you got Zacks, you got Yahoo. A lot of this information is transparent, and the information I'm talking about is like balance sheets, okay, quarterly statements, annual statements, cash flow statements. These are all pretty much report cards of how well a company is doing. And if it's a company that pays dividends, then you want to make sure you look at the history of how many years they paid dividends. If the dividend was at a certain amount, and then did it rise or did it fall? Okay. Okay, no doubt. Okay, no doubt. Yeah, and like I say, if you're already in the game, you already got stocks, make sure you do your research and check it out. Because if it's lows, if you get some lows lower than what you bought it, and you want to, and it's a company that you want to stay with, well, if you bought it at $4 and it's down to $3, and you like that company, increase your position. Okay, increase your position, because remember, just holding on to cash. If you see what's going on right now, we had like a $2.2 trillion stimulus. The Federal Reserve has already pumped trillions and trillions of dollars into this economy, which makes it phony money. Remember, the more money they pump into the economy, the less value of that money. Okay, supply and demand, price and demand. And so if you're sitting on a lot of cash, the cash is going to be losing value. So your best bet is to make sure that you invest and put your money in some type of securities that you're going to be comfortable with. I'm not advocating that you go and buy stocks right now, but there's some pretty good opportunities out there right now. Okay, there are some great opportunities out there right now. I think that the market is going to get even lower, where you can actually increase your positions in these particular companies that you choose. All right, but back to what I was saying for those who've never bought stocks before. Okay, once you open up a brokerage account, right? Once you've done the research on the companies that you're interested in basically buying, because that's basically what you're doing. You're buying into a company. And when you buy into a company, family, I don't care if you have 10 stocks, 100 stocks, or 1,000,000 stocks, you're part of that company. So don't ever look at when you buy the stocks and the price go down, you bought it at $5 and then the price go down to $4. Don't look at it as you losing your money. No. Money that's not what it's about. You still own the asset. All right. So many people get caught up in buying stocks, and then they see the price drop, and then they panic and they sell it. Well, you weren't comfortable with that company anyway. Okay. And that's why I'm going to kind of get into some protection targets that you can use to help protect yourself against situations like that. If you kind of weary about it, there are some things that you can do that we're going to talk about that can protect you from losing amount of money that you try to avoid losing, which means you can pretty much dictate how much you're going to lose. All right. And so let's get into it. Fanny, once you find out the company you want to purchase, all right, you're going to go to the site, the Fidelity site, your E-Trade, your Charles Schwab, whatever brokerage account, whatever brokerage firm that you have your account in, you're going to go to the account. Like, a lot of stuff is online. All right. And once you do that, there are a couple of things that you need to know that's pretty consistent every time you buy stocks. There are particular 3 things that you need to know. In fact, like I said, it's for entertainment purposes only. All right. One, you need to know the market price. Okay. And the market price of a company is the stock price that the company is asking for per share, i.e., Ford is $5 a share. Well, that's the market price. So if you want to buy Ford stock, you have to pay $5 per share. So if you want to buy 100 shares of Ford, okay, for $5, that's $5 times 100. That gives you the price amount of money you need to buy 100 shares of Ford. All right. And so when you do that, if you don't want to buy Ford for $5, there's something called a limit price. And what the limit price does is you actually put in the price you want to buy the stock for. I use Ford as an example. It's $5 a share. Well, you can see that there are certain bids that people want to sell their Ford stock, and they're willing to accept something less than $5. Maybe $4.90, maybe $4.95. But whatever it is, you can put that price in what is called a limit price. And you put that in to say, this is how much I want to pay for Ford, $4.95. All right. Now, does that mean you're going to get the Ford stock for $4.95? No, it doesn't mean that, because if it's not there, it's not there. All right. So what happens? Let's say you buy Ford stock. right? You wanted to buy 100 shares of Ford. Now the stock is priced at $5, but you want to get it. You want to pay $4.95 for it. Well, you put your order in. You put your limit order in, and that's basically what it is, a limit order. But that's how much you want to pay for it. Remember, the market price is how much, the going rate of the stock is, which is $5. So you have a market price, right? Then you have what you want to pay for, which is the limit order, which is $4.95. Okay. Now, once you put that order in for $4.95, and you want to buy 100 shares of Ford, well, the next day when the market opens, you will see whether or not that $4.95 held up or not. Because if it didn't hold up, if the shares wasn't there for $4.95, then that order is automatically going to be killed, and you still have your money in the account. All right, and so that's what they call a limit order. And I really recommend that you look into that limit order status. Don't just go and just buy. It's just like buying anything. Why would you want to go buy a pair of Jordans for $200 when you can get it for $150? You did? It's the same thing with buying stocks. And so when you go into that account and you want to buy that Ford stock, you can't get it for $4.95. Well, the order automatically dies. And then the next day, you can go in the next day and try it again. Okay? So what happens is this, family. Having an account allows you the freedom to buy whatever asset you want to buy. And to avoid losing money, there's something called a stop loss. And let me just back up for a minute. Like I said, this is for entertainment purposes only. Let me just back up for a minute. When you open up your brokerage account, okay, you can buy stocks. The market opens up at 8 o'clock here, 7 o'clock Central, 7 o'clock Eastern, 8 o'clock here in Texas. So at 8 o'clock, you can start buying stock from 8 to 4. The market closes at 4 o'clock. Now, if you are a preferred investor, maybe you have after-hour privileges. You have to pay a little bit more for that, but there are opportunities for you to buy stock after 4 o'clock. But it only, you have to be one of those preferred investors, okay? But if you're just new to the game, you need to know a couple of things, that the market opens at 8 and closes at 4. So from 8 to 4, you can buy as many stocks if you want. Okay, so let's just back up. You're really interested in buying the stocks. Remember, there's a market price, and then there's what they call a limit order. The market price is what they're asking for. The limit order is what you want to buy, it for, the price you want to buy the stock. And like I said, there's always people buying and selling. Sometimes people get in a situation where they will sell their stock for $4.95 or $4.90. And if that's the case, then you win, and then you get to buy the stock at a cheaper price. Okay, but let's say the limit price isn't there. Of course, I said before, then that whole order you just put in, it kills it. All right. Now, I said, how can you prevent yourself from losing money? I want to give you an example. You buy 100 shares of Ford for $5 a share. You wake up the next day and it's $4 a share. So here you are, done lost $1, per share. Well, you thinking, oh man, I done lost $1. My stock is going down, right? Well, what do? Do you sell it because you're nervous? Or do you say, well, I'm just going to ride it out? Now, remember, if it's a stock that you're comfortable with and you're in it for the long haul, then you can ride it out. But if you kind of weary of riding things out and you want to avoid losses, then there's something they call a stop loss. Hey, Jazz, what it do? Carbon, what it do? There's something called a stop loss. All right. And a stop loss is an option that you have when you're buying the stocks to prevent yourself from losing a certain amount of money. I go back to my example. If you buy 100 shares of Ford for $5 and you don't want to lose more than 50 cents, and you kind of weary because you've been in the garden, that, you're supposed to do your research. You're supposed to kind of keep up with geopolitical news. And you find out that Ford is pretty much fired the CEO. Or you find out that Ford has had 200,000 cars recalled. Well, that information tells you that something may happen to Ford stock the next day. You did? So what are you going to do? You're going to go into your order and you're going to put in what they call a stop loss. And what does a stop loss do? The stop loss is, once you put it in, you put in $4.50 or you put in $4.90. And once you put that $4.90 stop loss in, you can dictate how long you want that stop loss to last. So let's say, for instance, you're nervous that price is going to go down. You put a stop loss in there for $4.90. Well, if Ford stock drops to $3 the next day, right? And you wake up the next day and you're looking at your stock and you're like, oh man, it done dropped to $3 a share. But guess what? You protected yourself because you put in a stop loss at $4.90. And so when you woke up the next morning, you saw that you sold your Ford stocks for $4.90. And you didn't lose the money that a lot of other people lost by not having the knowledge of a stop loss. See, imagine if the government allowed, or these corporations allowed people with 401ks the opportunity to have stop losses. Because see, me personally, like I said, I'm not contributing to a 401k because I'm conscious and I've been knowing this is going to happen for a couple of years now. Okay. But imagine if I were contributing to a 401k and I knew this information, I would be able to contact the company that's over my 401k and say, listen, I want to put a stop loss in. You did? But they don't do that. And so you lose your money. You feel me? And so there are three things, family. Thank you for joining me in the garden. There are three things that you need to know when you're buying stocks. This is something that you need to make sure that you always keep with you. The market price, the limit price or limit order, and what they call a stop loss. See, stop losses will prevent you from losing a lot of money. And also a stop loss can help you get back into a position that normally most people will lose. I use that example. A person didn't put a stop loss in on that Ford stock and it dropped to $3 a share because they weren't paying attention to the news about Ford recalling all those cars and firing their CEO. You was conscious of that. You put a stop loss in. Now you still have money because all your 100 shares of Ford was sold at $4.90 automatically. So you can go to sleep at night knowing that if anything pop off, I'm not losing no more than 10 cents a share. And I'm going to have that $4.90 a share still left in my account. And so when Ford do drop down so low, if I decide to buy more stock in Ford, I can at a cheaper price than what I bought it for. You see how that work? Dion, what it do? Okay? So that's what I want to do. So I just want to come back with some information. Like I say, that's basically how you do it. Okay? You do your research on companies. And you have faith in the companies that you purchase. You don't want to just be an investor buying stocks and just selling them at the first sign of trouble. You got to know when to get in and when to get out. And if you're going to get out with more of the money that with more money than you lose. And you can do that by utilizing what they call a stop loss. Okay. Now, I want to also talk about something called stock options because, this is a great opportunity to buy stocks when you don't have all the capital necessary at that particular time, where you can say, okay, you can have an option to buy stocks. And I want to go back to that example I used with the Ford stock. Now, buying a stock, outright, you would just go ahead and go to your brokerage account. And if it's $5 a share, you want 100 shares, bam. You know how much money that's going to cost you to get that, okay? And once you have that money to buy those shares, you got 100 shares of Ford in your account. Well, let's say you don't have that. Well, let's say I want the option to buy Ford stock. Well, every option, family, comes in what they call 100 share bundles. So if I want to buy an option of Ford, well, that's 100 shares. And how options work, they work like this. Let's say Ford stock is $5 a share like we use, right? But you've been paying attention to the geopolitical news. And you find out that the Ford recalled 20,000 cars, right? As well as they fired the CEO. Well, you know that, Ford stock is going to drop. But I like Ford. I'm still investing Ford because I know in the long run, it's going to benefit me because Ford is also one of the oldest companies in America, a staple of society, as well as a dividend-paying company. Okay? With ties to Lyft and Uber, with ties to electric cars, with ties to the coronavirus and manufacturing masks and stuff. So all this stuff is like, hey, they have some viability that they're going to be around for a long time. So I tell you what, I'm going to buy me some Ford stock. And I know right now some things going to happen and Ford stock is going to drop. So you want to buy what they call a stock option in Ford. So how does that work? Well, you basically saying, or basically you feeling that the stock is going to drop because of what you've been doing your research on, and you go and buy an option at $3. Okay, and this is what they call buying a put option. You betting or you thinking that once Ford stock drops to $3, right, you can buy the stock for $3 a share. Okay, so when the Ford stock does drop, remember options are based in time increments. So you can have a 1 week option, a 2 week option. If you think that Ford stock is going to drop a month from now, you can have a month option. And the thing with options that they don't cost as much. Okay, so you can say, like, for instance, a $3 option may cost 20 cents, right? So if it's 20 cents, that's 20 cents times 100. And that's all you're paying. And remember, the stock shares right now for Ford is $5 a share, but you don't have that. But you betting that it's going to drop. And when it drops, you can get it. Okay? And these options, guys, they got a put option and a call option. Okay? They call puts and calls. And basically you have the option to buy them if you want. And if the price doesn't go to where you want it to get to, then you don't have to buy it. That's your option. That's the beautiful thing about options. And just give you another example. Let's say, for instance, you know that Ford stock is going to really go up, right? From some inside information. And let's say you buy an option at $5, a week option at $5. Well, let's say it rises to $9 a share. Well, guess what? They still have to sell you those options at $5. But it's $9 a share now. So that's the $4 extra you made off of that option. You did? Okay? So you can make money with options. Okay? So, like I say, family, go ahead and do a little research. Like I say, with options, they call calls and puts. The call options are one that you know going to rise, and so you're going to put an option in for a lower price. So when it does get to the price that you know it's going to get to, they still have to sell you that option at the lower price, even though it's a higher price, and then you get the difference. Or if you own Ford stock, right? And remember, I was telling you about preventing yourself from losing money. Well, if you own 100 shares of Ford stock and you know that Ford stock is going to drop, you can buy what they call a put at $3. Buy a put option, and when it drops, you can make $2 a share off of that. Okay. So, family, like I said, options are a little bit more trickier than just buying the stock. But once you understand it, you can see how beneficial options can be once you understand exactly the strategies involved, because there are strategies involved in buying options, unlike just actually buying the stock outright. The benefit of buying the stock outright is that you can have a limit price. You don't have to buy the market price, and then you can buy all 100 shares right then. The flip side of that is that you got to have the capital to buy the shares, the 100 shares. Well, the stock option is a little different. You don't have to have all that money to buy it. Okay, so it's a little difference. Yeah, options, KY, they are a great opportunity to make some money while you're buying stocks at the same time. You dig? I mean, it's a lot of people make a lot of money off options. But like I say, with buying the stocks outright, you have great opportunities to make money as well, especially if you get into the game of technical analysis and fundamental analysis, where you're actually learning how to read charts, and I'm going to be coming back with a lot more information, family, learning how to read charts. Learning some different strategies, like understanding when a company is overbought or undersold. When it's like that, those will give you kind of indications of when to get in and when to get out. And that's basically what they call swing trading or day trading. I'm not a day trader, but I'm telling you, if you have the time to do the research, swing trading can give you some great opportunities to make some cash. Okay? So, what is cash and alternative balance? I got to look into that. You talking in reference to in your brokerage account, or you talking about reference to currency, foreign currency trading? Because right now, cash is not, to me, like I say, right now, cash is it's imperative to have if you want to get into any type of investing. Remember, small money don't make big money, but small money can build big money if you do it right. And like I say, if you have the time to research, if you have the time to read balance sheets and quarterly statements, and if you have the time to just look at something other than, crap, have the time, look at, look at Bloomberg, look at, Yahoo Finance, Zacks Investment, because it gives you so much information about these companies. And if you kind of keep up with that kind of stuff, like I told you, this company called Novavax, and I've been watching Novavax for a minute, and I got into Novavax when it was at $3.23 a share, right? And I should have got into it, but I didn't. But I knew it was going to do some good things, and I got in at $7. All right, because what happened was it got to it was at $3.23, and it bumped up to like $16, and it made me sick to my stomach. So I'm like, man, I should have got in, but I didn't. Well, I got in at $7. Right now, Novavax is at $15.50. So if I was basically in it to trade, if I was basically in it to make me some cash, and I had 1,000 shares of Novavax, okay, well, I would sell those shares right now at $15.60 and see how much money I made, right? You're talking a difference between, like, if I got it at $7 a share, and it's at, now that's 1,000 shares, that's $7,000, and right now it's $15 a share. That's $15,000. So that's over over $7,500 profit. Now imagine doing that with 2, 3, 4 companies, and you paying attention to that kind of stuff. It can be pretty lucrative, family. It can be pretty lucrative, but you got to put the time in. You have to understand market price, limit orders, and stop losses as well. Because if I was in it to win it, and if I want to sell my Novavax stock, right? Well, I will put a stop loss at $15. So if the stock did drop tomorrow to $14 or $13, I still made a profit of $15. I mean, I still got out at $15 a share, and I bought it at $7 a share. So I still maintained my profit, and I was able to, determine my loss. Opposed to if I didn't use the stop loss, and then Novavax dropped to $6 a share, bam, that's a lot of money I lost. Okay, let's see, Byron, what it do? Okay, real estate bidding stock, no doubt, Holly Pro. Oh man, no doubt. Yeah, J&J, man, Johnson and Johnson. Yeah, you still gonna win though. But Byron, buy the money market account. Money market accounts are similar to this is what banks normally offer. I kind of put them in the same class of CDs, certificates of deposit, because the money market account is basically an account that you can open up with a bank, and they give you a slightly higher interest on your money than a savings account. Now, am I an advocate of money market account? Yes, if only knowledge I had was money markets and savings account and checking accounts. So of course I would be an advocate of money market account because they give me a higher interest on my money. But think about this, Byron, go check out the interest that the banks are giving in your money market account. Look at the interest, because I promise you, if it's not over 2%, and I'm telling you right now, it's nowhere near close to that, I don't think, then it's not a benefit. Okay? And so a money market account is basically a glorified savings account where the banks give you a slightly higher interest on your money than they do in a traditional savings account. Okay? So like I say, money market accounts are basically offered at banks. You got savings accounts, checking accounts, money market accounts, certificates of deposits, okay? IRAs, individual retirement accounts, okay? Sweep account. Let me do the research on that, KY. Let me come back with some research on that. No, Hollywood, this is a bull trap. The market is still propped up on phony money. Okay? Oh, no doubt, Byron. You're welcome. No, it's still propped up on phony money, Hollywood. I will hold tight. Okay. And remember, banks right now are, about to suspend dividends. And I just found out that AT&T's 55 cents dividend is about to be threatened. Now, what is that telling you, family? That these companies and these banks that are suspending dividends are basically not paying investors. That's why it's not the right time to get in. You dig? I mean, because anytime you see this type of temperature where, banks are shutting down, family, the FDIC just allowed a bank to shut down. Now, banks are supposed to be protected by FDIC, but when a bank shuts down or is closed, that's not a good sign. Because imagine all the loans that this bank had out. Imagine all the mortgages that this bank had out. So what's going to happen to all of that? You did? So no, this isn't the right time, fam. What this time is, I feel, is you to get your knowledge up, build your financial literacy up, understand what's going on with the market price, limit orders, stop losses. Go to a brokerage firm and practice it. All right. Go to Yahoo Finance and then type in a company symbol. Or just type in a company, and it's going to give you a whole list of information about that company. They're going to show you them. They're going to show you what they call the stock price. Okay, the PE ratios, if they pay dividends, the dividend yield, the EPS, which is the earnings per share. And see, this is information that when you buy a stock, you want to know this, especially the earnings per share, because every quarter companies have to report their earnings. And guess what? You can be on top of that before it happens, because every company has to report when they report their earnings. And so kind of to get on top of, get a head start on whether there's some shenanigans going on with your company, you can find that yourself. You can look at what the estimated earnings per share is supposed to be in relation to what their earnings per share was the quarter before that, right? Let's say, for instance, Ford's earnings report comes up, let's say April the 12th, right? Well, if I know that, and I know Ford has been having some tough times lately, well, I know after that earnings report, the stock is going to go down. And when the stock go down, what that tell you? Then you're going to lose some money. But if you know that, that's when you go ahead and institute your stop losses. But if you're in it for the long haul, okay, I wouldn't do it. Appreciate that, James. I knew I just came across something on the wire about AT&T cutting dividends. Now, that ain't good, fam. I mean, that's a 55 cents dividend. So like I said, if you had 10,000 shares of stock in AT&T, that's $5,500 that you've been getting every 3 months that's about to get cut. That ain't cool, family. All right? So that's why it's important to diversify. Not just, it's cool to have stocks. It's cool to, understand the stock game, because stocks are a great opportunity to gain wealth, but it's cyclical. Okay? So you have to diversify. You have to understand real estate as well. Okay. And always keep some cash. You dig? Yeah. Oh, yeah. But see, one thing about 4K, why it's coming back. So, that 3 going to turn to 9 to 1,200 soon. You know what I'm saying? We just got to, push through the storm. Like I say, when there's blood in the streets, guys, we supposed to just sit back and chill. I mean, it's going to be a great opportunity, family. Don't get it twisted. I'm anticipating the Dow to get down to 15, 16,000. I mean, the S&P 500, I think one of the JP Morgan analysts said the S&P 500 may get down to 1,500. So we talking some great opportunities to be out there. All right, this is gonna be a great opportunity, family. But like I said, if I just want to come back in and get some information, if you're just joining me and if you didn't get an opportunity to catch me earlier, what we basically talked about is how to buy stocks and what are stock options. And the 3 things that are imperative that you understand about buying stocks is the market price, limit orders, and stop losses. All right. And then, of course, what stock options are, they also give you the opportunity to buy stocks, but give you the opportunity to buy them at a certain price when you think it's going to be in a certain time in the future. And if it does get to that price you want, you have those options. You have the option to buy the stock or not. If it's not the price you want, you don't have to buy it. If it's the price you want, you can buy it. Okay. And if it's not the price you want, you didn't lose anything but the premium you paid for the stock, for the option. Okay. But you didn't lose all your money. So it's a lot of information out there, family. I hope I didn't get too technical. I want to try to make it as layman as possible because it's basically just like shopping. You did? Just like shopping. So let me get that down, KP. KY, let's see. So family, make sure you like, share, and subscribe. I'll be coming back again, family, tomorrow. We're gonna get into some things. I think it's kind of crazy that with all this madness going on and this coronavirus stuff going on, I just think it's kind of crazy because, you know, and I'm gonna end with this. You're supposed to have an autopsy after death of this nature, right? Isn't it wild that they can say 500 people died of coronavirus and they know that like the next day? I mean, what happened to autopsy? Because remember, this is a virus. And when people have complications, you know, you're supposed to have an autopsy to see exactly what complications that this virus do. I.e., the person died of pneumonia from complications with coronavirus, or the person had a heart attack from complications with coronavirus. But you don't know that without autopsy. Okay? So I say that to make sure that we stay cognitively dissonant, make sure that we keep our eyes wide open, all three of them, and stay conscious. Okay? Pay yourself first. There's some great opportunities out there, family. I hate to keep saying it, but this ain't gambling. I mean, this is, if you're paying attention, you stay in the garden, you're going to see what I'm talking about. I said months and months and months ago that this was going to happen. Okay? And like I say, so when you know this, like I say, and on the mask, FYI, if you don't have a virus, why are you wearing a mask? Masks are for people who have the virus, so when they talk or breathe, it'll kind of minimize, what's coming out their mouth. It minimizes the exposure. But if you ain't got it, what you walking around with a mask for? You look ridiculous. All right? But I'm going to end with that, family. People in the garden, you already know what time it is. In the meantime, between time, may the Most High inside to bring you joy and being with us out of 5,000. Jazz, appreciate it, shorty. KY, no doubt. James, thank you, brother. Holla Pro, appreciate it. Byron, no doubt. And everybody else, I'm out of 5,000.